In less than 2 weeks, equity benchmark indices have soared 5%, reaching fresh highs on positive domestic and global cues. The Reserve Bank of India's monetary policy outcome on Friday is now the next crucial event that Dalal Street is eyeing. The RBI, meanwhile, is expected to stand pat on the benchmark repo rate on Friday, holding it steady at 6.5% for the fifth consecutive policy review. The status quo, experts say, will likely remain in place until the US Federal Reserve initiates rate cuts.
We expect a status quo in the policy. We are expecting that RBI will stick with this withdrawal accommodation stance because inflation has still not come to 4%, but it is within the tolerance band of around 4 to 6% right now. The policy is sufficiently restrictive, so over a period of time you should see the inflation coming towards 4% levels. And that is the time when actually RBI will have some room for him to cut rate, which we expect will happen in the next year. So that means our view is that maybe September will be the time when the rate cut will happen. And now going forward, what we expect is that the US also is expected to cut rate. So that will also give us some more comfort. So we expect RBI rate cuts will not be before the Fed rate cut, it will be after the Fed rate cut. So whenever the Fed starts cutting rate, our markets also will breathe easy and the rate cuts will happen.
As regard to domestic equities, analysts say the policy is unlikely to change the market's course, which is currently rallying, driven by hopes of political continuity on BJP's state election win.
The RBI policy this time is unlikely to be terribly consequential for equity markets because the markets are currently being driven more by sentiment around strengthening consumer and capex demand, as well as the recent election results which returned BJP to power in 3 of the 4 major states that went for polls this time.
That said, some key things that markets will closely watch out for include RBI Governor's remarks on last month's tightening of unsecured consumer credit norms. Additionally, any moves on systemic liquidity, which has remained in deficit last month, will also be eyed, especially by bond investors. Analysts, however, expect RBI to be cautious on any further open market operation or OMO sales ahead, given the prevailing tight conditions.
Don't expect too much of an overreach in terms of liquidity, with RBI coming in with greater OMOs or measures around CRR.
Besides, an increase in the GDP forecast for the current financial year is also likely after the upward surprise in the second quarter GDP print. Today, on 7th December, global markets and crude oil prices will provide cues for Dalal Street.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She has ambitions of becoming a brand. Business Standard.